Ladies and gentlemen, Greg Mikulowski from ForexLive.com. Today's date is June 16, 2023. This is a Forex Quick Look. I'm going to take a look at the dollar versus yen and explain the price action. First off, fundamentally, the Bank of Japan kept everything the same. The yield curve control remains under the same. The lower rates remain the same. The expectations that inflation will come down in the second half of the year remain the same. And that has led to a sharp move to the upside in the dollar versus yen in trading here today. A weaker yen, stronger dollar. That reversed the declines from yesterday, where everything was focused on the U.S. dollar yesterday. Anyway, technically, the price action tells a story. It's like reading the tape, the way the traders used to read the tape. That old expression. Some of you young people may have no idea what I'm talking about. I'm sure a lot of people don't. It was almost before my time, but nevertheless, reading the price action tells a story. And so I'm going to read the price action in trading here today. What we saw in the early Asian session was a continuation of the downside. The market was still focused on the U.S. Dollar side of it, and the price actually moved below the 100-hour moving average. That's a blue line in this chart, and also below the 50% retracement of the last move higher right through here. So that should have led to lower levels. But we saw the market snap back, and we snapped back helped by the Bank of Japan decision that ended up pushing the price to the upside here. And what we saw was this yellow area right here, and this is where I start to talk a little bit about the tape and what happened through here. But you can see the number of different swing areas through here. More recently, here, kind of form the level. Yes, we moved a little bit below it in trading yesterday before then closing right near the low of that swing area, and then again moving to the downside. So we started to move back to the upside, and where I want to focus on here, I'm going to zoom in just a little bit here just to show you what I mean, is that you see this low price right here. That low price stalled right against the low price of the low of the swing area at 140.22, and the market moved higher. And you see this low price right here after moving up to this level right here, sort of a random area. I just put a horizontal line there to show that level. But the market corrected right back down to the high of this swing area. So the low of the swing area and the high of the swing area, reading the tape, ended up being the base for the move, and for another base on the corrective move to the downside. So the buyers remained in control. Now, going back to this old high right here, you can see that the price extended way to the upside here, fell a little bit short. We found sellers against the old high that we saw from yesterday, came right back down. Where we come back down to? We came right back down to that area, which was the initial high in trading today at 140.76. So again, reading the tape, this high right here that led to the correction down to the high of the swing area, then broke above this high right here, and then came right back down to the old high right here, and that gave the market another reason to move to the upside, and that's what we're seeing here in trading here today. Yes, we did get some more hawkish comments from Bark and from Waller in early trading here today. That has helped to push the dollar back to the upside, but nevertheless, the technicals are telling the story, and those levels are holding support and keeping the buyers more in control in the dollar versus yen. So going forward, what would need to happen to ruin this? Well, a move back below the this level right here is a close risk, 140.76.8. If we move below that level, then we're going to focus here on this swing area, and you can see the 100-hour moving average. That's a blue line in this chart. Is starting to move higher, and it's going to be into that swing area shortly, so that level is going to be in play as well. So those are the levels that if we stay above, the buyers remain more in control. If we move below, then things start to unwind a little bit. So there you have it, a look at the tape, a look at the dollar versus yen. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.